Hello traders, this is a live trade recap. We took 3 trades this morning. I'm going to go over everything in just a moment. Just in case you're new around here, I'm going to play the intro video. Otherwise, just fast forward about 3 minutes and you should be up to speed. Here it comes. Welcome to Trading Armor. My name is David, and as of the recording of this introduction, it is August 15th, 2022. I've been actively trading the stock market for over 2.5 years now. I'm going to use this introduction for many videos, so check the date of the one you're watching right now. It's probably much more recent. If you're a returning viewer, welcome back and feel free to skip over this intro. But if you're new around here, thanks for stopping by and allow me to introduce myself and give you a few reasons as to why you may or may not want to stick around. My journey as a trader began in May of 2020, and like most new traders, I quickly realized that trading is not as easy as most people make it out to be. In fact, it's downright difficult. Luckily, even when I was new, I approached it with caution, which kept me from blowing up my account. Eventually, I realized that if I had any chance of being a profitable trader, that I needed not only a good strategy, but a well thought out and written day trading plan. I also needed the discipline to trade that plan exactly the same way every single day. I get my discipline from forward testing all of these trading plans by taking 100 trades or more, collecting the data, and from that data I can produce statistics. Once I know my statistics, I can go into the market with some expectation of what's going to happen, and that makes it very easy for me to stay disciplined and stick to my plan. We've already proven a small cap trading plan profitable after taking 100 trades, but we also proved that plan was quite tedious to trade. So right now, I am currently forward testing 2 new trading plans. One of them is for active day traders, people that want to trade the market every single day right at the open. That plan is called the Top Gainers Trading Plan, and the other plan is quite different. Both of them can be traded individually or simultaneously. The other plan is for people that may not be around during market hours or just don't have any desire to sit in front of charts all day. That's the SPXL day trading plan. Now, both of those trading plans have their own playlist on my YouTube channel, so you can check those out. Now, it's important to know that I am not a professional trader. I have absolutely no formal financial education. In fact, my first degree is in music, and later on I went back to school for physics. Yeah, physics. And I just recently finished a master's degree in medical physics, and I know all of that might sound really strange, but apparently I have a curious, creative, and problem-solving mind, which allows me to approach trading in a novel way. So stick around if you'd like to watch me try and apply my odd educational background and unique life experiences to the very unusual world of the stock market. Thank you. Okay, we should be back live now. I did try to make this a live trading video, but the trade just dragged on a little bit too long, so that's why you hear me speaking over the video there. This is the market open, and we're trading, as I said, the Top Gainers trading list. This is just me going through the intro video during the live trade session. And I'm just looking for the stocks that meet the Top Gainers criteria, placing them on the chart, restarting Webull a few times to make sure that the Top Gainers list refreshes properly. That's a good thing to do when you're near the market open. And let's see. The other thing is I'm placing alerts at the levels that I want to see broken, and whichever alert goes off first, that is the ticker symbol that I trade, and that's it. I use all 3 trades if I have to on that ticker symbol, and that's all part of trader discipline and sticking to the plan. If you just jump around from one ticker to the other, chances are you're going to just make a mess of the day and end up red. I mean, occasionally you'll get lucky doing that. Today we just stuck with the one ticker symbol, and we still ended up red, and that's going to happen too. So, but the main thing is you need to have a trading plan going into every single trade. Hopefully it's the same plan every day until you have taken 100 trades with that plan. Otherwise, your results are absolutely meaningless. So if you know anything about statistics, there's something called the law of large numbers. You need to have a sample size of 100 or more to be statistically significant. I'm kind of, paraphrasing there, but just to give you the idea. And that's what we're trying to do here, is collect 100 trades. So far, I think we have around 58 trades. And if you watch the video that I released this weekend, you see we're in a little bit of a drawdown, and we added to that drawdown today very little. But it's still way too early to throw in the towel. We really need to finish this and take 100 trades, because all we are really is one good trade away from being back in the black on this trading plan. So we're really on the verge of profitability here, and the fact that we're about halfway through collecting the data is just a sign that, we just need to keep doing this, because things could go either way at this point. And the data, we won't really even be able to say that this plan doesn't work if we stop before the 100 trades. If we just stop now and say, well, it hasn't been profitable. Actually, it was very profitable in the beginning. After our first 25 or 30 trades, we were up a lot. And then we have had a bit of a losing streak now, even though we haven't changed anything. So we're just seeing the way these statistics play out of this trading plan over time. And that's what we want to know. We want to know how this thing plays out over time. So we need to finish it up and take it to at least 100 trades. And then we'll be able to say it is or it isn't profitable. So COUP, that was the first ticker symbol that triggered a trade. And this one, I didn't even get a chance to put an alert on. As soon as I pulled it up on the chart page, let me just show you where I pulled it up. You can see that the previous session high is 64.25, and it had already broken that level. It's at 66.02. None of these other ticker symbols had broken their previous session high at this point. Only COWP. So that is the ticker symbol that we have to trade according to the trading plan, no matter what. So that's the one we go with, and let's see what happens here. So we actually missed the first entry, would have been for the break of this 1 minute candle. And since this is the first 1 minute candle of the day, which obviously is going to contain a lot of volatility, there's going to be a lot of orders kind of like waiting to be filled on the first 1 minute candle. So that's why this candle is just always typically going to be crazy. And the very first entry that I could have taken was for the break of this candle here. And I would have placed the stop loss at just the low of the previous candle because of the kind of volatility of this candle. We want to see, in this scenario, we'd want to see the stock just break out and go crazy after breaking over this 1 minute high. And if it doesn't do that, we want out. So what would have happened in this scenario is I would have been stopped out here, most likely. So then I just need to take the next entry, the next 1 minute candle that makes a new high at this point. So that's what I'm waiting for right now. And that will be trade number 1. So I'm just kind of marking out where the previous stop loss would have been to just show that we would have been stopped out. Okay, so this is trade number 1. And notice that it only bought me 1 share. That's because we're trading with $100. So if I was trading a dollar stock, we would get 100 shares. But since this stock is over $50, we can't even get more than 1 share. And that's just the way it works. We're not concerned about that at this point. We're just trading the plan, doing everything according to plan. You can see as soon as I got in this thing took off. It looks like, it just rocketed up there, but it didn't even get to 2R. So, we're zoomed in on the chart, so it might look a little bit more exciting than it really is. It probably went to 1.8R or something like that. But anyway, which means the multiples times our risk. So right now we're risking, let's see, 29 cents, I believe. So anyway, we're risking that amount, and then we want 3 times that amount for our profit target. That's where that 66.05 comes up. And it looked kind of promising in the beginning. Pulls back a little bit, comes down kind of near our stop, and then starts to kind of creep back up. So that yellow line, that's just showing you where the previous session high is. We're still in that first trade number 1. Goes back up again, meets some resistance, comes back down. So real choppy price action, and ends up stopping us out. That's trade number 1. So our trading plan says we must take up to 2 more trades. If that second trade fails, then I have to take a third trade. But notice that first trade was a lot lower than our average risk. So the nice thing is, and this is just, again, sometimes this is going to happen, sometimes this isn't. You might have a low risk trade that works out, and then the trade doesn't add that much profit to your statistics, although we are trading 3 times our risk, so we're always getting 3 times what we risk. But today it happened to kind of work out in our favor in the sense that these trades were low risk and they all 3 failed. So it's going to end up kind of a scratch day, more so than a minus 3R day. So our worst case scenario is that we take a trade that is our average risk or above average risk and we lose all 3 trades. Then we are down 3R for the day. And today, hypothetically, we're down 3R, but in actuality, P&L wise, we're probably only down about a quarter R or even less. And I'll show you that on Webull in just a moment. So that was trade number 2, also stopped us out, and I believe this is trade number 3, which also stopped us out. And that's just the way it's going to go sometime. The main thing is that you stick to your plan and don't break it. Don't get upset that you lost all 3 trades and try to win it back and revenge trade. More than likely, you are going to end up just compounding your red day, especially in the long run. Occasionally, you get lucky doing that, and then you think you can get away with it, and sooner or later it catches up with you and you wipe out all your gains. So best thing to do is to have a plan and stick to that plan when you go into the trade. So let's take a look at the Webull account and we'll see how much we lost today. $1.62, so way less than our normal risk. Our normal risk is about $3.75 and this is $1.62. So we could say we lost about 1R or 1.25R, something like that, but that's not how we're going to record it on the spreadsheet. It'll still be a minus 3R on the spreadsheet, and we'll go over all of that stuff at the end of the week. So hopefully this video was helpful to you. Hopefully I didn't get into too many details and confuse you, but the main message, and we did it here again today, is to go into every single trade with a plan and stick to that plan no matter what. Even if you have to take 3 losses in a row, even if you have multiple red days in a row, you have to sustain the trading plan for 100 trades or more to find out if it works or not. You never know when you are in a period where just everything is going against you statistically and you just have a streak of red. That doesn't mean that your trading plan no longer works. You could just be in kind of a statistically unfavorable moment. So the classic example that I always use is the coin toss. Everyone knows that a fair coin has a 50-50 chance of coming up heads or tails, but if you grab a coin right now and you start flipping it and you just keep flipping it over and over again, I guarantee you're going to have multiple series where you have 3, 4, 5, 6 heads or tails in a row. And that doesn't mean that all of a sudden that coin is broken, it doesn't work anymore. It's just the way statistics work. But if you keep on flipping that coin for 100 tosses or more, you're going to find out that in the long run, it averages out to about 50-50. So that's what we're doing right now, is we're finding out what the probability of this trading plan is and working out and seeing if it's profitable with that 3R profit target. So watch tomorrow for another trading video, and the end of the week we'll go over all of the data and statistics so far. So hopefully this video was helpful to you. As always, go on every single trade with a plan, stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.